What is up, guys? Today we're going to be doing a video on how these interest rates are affecting all of us, how much this is costing us, and what is going on in the marketplace so that you can understand it at a deeper level. We're going to get started with that right now. Welcome back to the channel, guys. Today we're talking about interest rates and money, and I wanted to do this video so that I could show you on the screen exactly what this interest rate change is costing all of us and how it's affecting you. So we're going to use rates we had like a year ago, which were around 3.5%, versus rates today, which are around 6.5%. I'm just basically using credit that's over 700, A plus credit, and that'll get you the best interest rates and the best prices of money for these examples. We're going to use a 2022 RAV4. I'll show you pictures of that so you can take a look at it. With less than 40,000 miles, all-wheel drive LE, just the basic car. 22 Toyota RAV4, all-wheel drive LE, with just the basic equipment. So we're going to dice this up so you can look at it. As usual, if you've got more input on this topic, please feel free to add it. We are not afraid to look at it with you and have a discussion. So let's get started. Let's dive into it right now. So first, let's show you the car. So we're talking about a 2022 RAV4. This is a vehicle that many people like to purchase because they have great reliability. It has a nice array of features that you can have, safety tech, and they're super reliable. So basically, this is a 22 RAV4. It seats 5 people. It doesn't tow a lot, but it gets great gas mileage for what it is, and it has a hatchback in the back for what all of us like nowadays, which is the typical SUV. So for our example, this is the car we're going to be using, so that you can, really make sense of what I'm talking about. And then you can compare this to other vehicles on the marketplace when you're looking at your own data. All right, for this example, we're using $31,000 for the selling price. You can see I have on the left 3.5%, and on the right we have 6.5%. So this is there so that you guys can make sense of this, and you can pause the video and take a look at it. These are the fees that we charge. Taxes are 8.2% on both of them. They're the same. And then we have 60 months as our finance term on both sides. So last year, 3.5%. This year, 6.5%. And we're going to show you why and what's changed. So look at what the payments are first. $624 last year, $672 this year. So it's about a $50 a month change. But that's not the end of the story. Look at the left again. The finance charge, $3,100 over 5 years versus $5,900 over 5 years. And then on the bottom, you see the total of the payments, $37,400 versus $40,321. I mean, this is a major difference, and this is why the market is suppressed, and people are looking at this like, wow, these payments are way higher than I want them to be. But it's all tied to these interest rates. Okay, so now you're educated on what's going on with the rates and why it's affecting the payments and the total of the cost over the life of the loan. That's great, but hey, Ronnie, I still need to get a car. Okay, I understand that. So what I'm seeing a lot of, and I'd like to give you some of my opinion on, is spend a little bit more money. Most of the time when we're looking to finance a vehicle and you're going to do it for 5 years, I like to get a vehicle that has as low mileage as possible. So something that potentially is still under warranty, like a 2020 with 35,000 miles, or just like we used in the example, a 2022 with less than 40,000 miles is still going to have some of the powertrain warranty, and in some cases, some of the bumper to bumper warranty. And that can help extend the life of the vehicle before you have to start paying for repairs. And what most people think is it's a Toyota, it's going to last forever. I'm like, well, it's still an unknown. You have no idea. So if you could spend $3,000 more and afford a little bit more payment, I think that your chances of having that vehicle for a longer period of time just go up. And I say that based on doing this for a very long time and watching a lot of different scenarios. I can be proven wrong. There are people out there that work on their own cars. They don't mind getting vehicles that have 65,000 miles on them and financing them for 5 years. That's okay. And they can win this. But if you're like me and you don't work on vehicles, I like getting a vehicle that hopefully I won't have to work on for 3 or 4 years, and that keeps costs down while I'm making a higher payment. I hope that makes sense. I hope this video was helpful to give you some information on the interest rates. And if you've got any questions, as usual, hit me up or DM me. I'm Ronnie Haskins. If you'd like more information on leasing or buying or anything car related, check out some of the videos in our channel. We'd love to have you subscribe to the channel and follow us.